Hello and welcome to another update video about Solana. Yeah, Solana has moved up and down a little bit, is still holding our $161 level and has still been holding above the 26th of May low in the recent decline. So we continue to move sideways in the same range that I already communicated in the last few days and videos. So I have, however, taken out really the smallest microstructure because it has become unreliable. That's often what happens in these ranges. We want to talk about the latest ideas I have about the microstructure, but we need to keep it at a level that's actually to a degree reliable at least. We still seem to be moving in corrective patterns. Okay, the double bottom formation suggests that definitely, because these double bottoms are typically not great setups. There's oftentimes a bit of a bounce, but often they don't really lead to a substantial breakout, a sustainable breakout. So we're going to talk about that now. First of all, quick reminder, the yellow scenario is still on the chart and is not invalidated. What is the yellow count? The yellow count suggests that this is just, or was, a B-wave rally which topped on the 21st of May around $188, yeah, $189, a B-wave rally. From here, a C-wave decline could be unfolding or could have started already. If this is the case, the price should break below $109. Yeah. First of all, we need a break below 147, which is the nearest relevant support level. And that, because that wave count or that support level would actually invalidate, you could say, not invalidate, but it would make the probabilities, it would reduce the probabilities for the orange count a lot. Okay, so that would clearly shift probabilities towards the yellow scenario. Below $147.80, then we have the invalidation point at around 137, and then the $119 level is going to be next support. So there's quite a bit of work to do to really confirm the yellow count. I have to say though that I don't prefer the yellow count at this stage. I will start to prefer it probably if there is a break below 147. So if there is a break below 147, we can put the microstructure for the yellow count onto the chart. Until then, I prefer the orange scenario, which is fairly similar to yellow because it's also a B-wave rally, but a more extended B-wave rally. As you can see, not much happened really recently. But in the orange scenario, it's just a different way of labeling and counting that B-wave rally. And it could take us above $200. And instead of a WXY structure in the yellow count, which is always unreliable and therefore never the preferred option until we see further evidence, I count an A, B, C structure, and the C wave is a 1, 2. Then an A, B, and we could start the C wave next of wave 3, then get a 4, 5. At the moment, this here is a bit ambiguous because we're just in a sideways range. Not much happened since the end of May. So my idea would be that possibly either the B wave, so obviously we are then in the orange count and we are in the third wave and currently in the process of wrapping up a B wave pullback in wave 3. So don't get confused, this move up here is an ending diagonal. So the waves like 1, 2, 3, 4, 5 all are corrective. They're all moving in corrective structures. This is the support region between $167.50 and $147.80. And yeah, I mean, this move down could have been all of wave B. However, the strong decline makes that very unlikely. So I've made that small change to the wave count. What is possible though is that this was the A wave of the B wave, the decline which bottomed on the 26th of May at around $161. And that we are now still in the B wave. Is the B wave already in of wave B? Possibly, but the move down looks corrective, so I don't necessarily focus on that yet until we get a break below 161. So a break below 161 would be a signal that we go down more directly to test 155.70 or 147.80. Until then, I think either wave B has formed a low on Sunday the 26th, but it's become less reliable, or we are in a larger B wave flat structure, A, B, C in wave B, a rally into resistance between $174.50 and $182.77 before the C wave down starts. And then from here, we could attempt the C wave rally. Very, very complex. Just try to help you understand what the microstructure could look like. Don't think any of that is reliable until we get a first impulse or 5-wave movement. Certainly the double bottom indicates weakness. No, it's not typically a great reversal signal. It just isn't, okay? It can still lead to a bit of a bounce, absolutely. And I'm happy to be impressed, but for now, I just want to highlight the risk that this could just let's call it a dead cat bounce, okay? A B wave rally within a larger B wave. Bear in mind, this is resistance. A break above $183 here would already make the direct pathway higher more likely. Either way, without focusing too much on the micro, as long as we're holding 147.80, I'm looking for further upside continuation in wave C of B primarily. That's my update about Solana. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.